Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Thursday, and we're at the 22nd of June, 2023, and the time about 6:25 p.m. Central Time. Now, tomorrow you don't have any real more economic news other than we get the service sector and service sector, I think, and manufacturing PMIs come out tomorrow. So I'd be looking at those. The Fed is done with the two-day talk, and that was an overhang on the market. Why we're up in the stock market? Probably because the Fed has nothing else to say. And I think that's been the key. As you can see, the gold market down into the 1920s, silver near $22, no longer a $24 market. It's there. I'm moving over already to the SEP copper, and you'll say why? Because I expect that China's going to keep rolling out stimulus packages, and when we can get a signal to get in under the terms we want, away we go. And I don't think we should do the July because first notice day to get deliveries is right around the corner. So if we're going to put on something new, I think we take a look at that. Pretty soon I'll be moving all the metals over. As I said, I would do it in stages. I'm beginning today with copper. By next week, I'll be into the other markets. The dollar had a rally today at the expense of a number of currencies, and it's because you walk away and you see today that Norway, Switzerland, Turkey, all raised interest rates. I think I'm missing one more. What happened in Mexico at the afternoon is Mexico decided to hold rates steady, and they're going to do that, they said, for quite a period of time. And they have been, on the right side, their inflation numbers, even core, are falling. Not dramatically, but falling. They're into the legit pause phase. We haven't gotten there. We might. But again, I'm going to argue that I don't agree that you drop down a tenth or 2/10 and you say that I want to stand back and look. You, as I said, you keep going at the market. And even the Fed Chair Powell, what did he say? 2 more rate hikes are likely. I didn't get ex-Fed member Fisher. He was, if you'll remember, he was on the Fed for a while. And I saw his interview today. Hawkish, he thinks interest rates have to go higher. They pressed him hard to get an answer. Would you have done what Fed Chair Powell did? And of course, he was diplomatic. Well, I'm a big hawk. Yeah, I probably would have done it. You could see it was pulling teeth. I don't think he wanted to. But what you do is you honor the Fed Chair. What's he got to lose by saying what he would have done? He wasn't in the position to do it. Very important. When we look at gold, I feel good in the sense that I had a handle on the market. I thought the market was going to fight a battle at the 18-week average of closes. It did, and the battle's been lost. You're down 2.33%. You're down $45 for the week. So momentum is down. That's the first thing. When momentum is down, you should be looking for sell signals. When we take a look at the August gold here, you had an area where you tried to hold. You can see it here, here, and here, and it failed on this day. The rally back never took out these highs, and the market just caved in, if you will. The pattern is one of lower highs and lower lows on the swing line. This line, the swing line, is a technique that I developed, and I'm going to tell you now, it's 26 years ago. And my son at that point, I'll age him, was very young. He'll be mad if I say his age. And I said, I could teach you to go into any room and tell people what the trend of a market is and what the risk of a trend. And he went high. I said, let's take out any chart. And I showed him the technique, and he'd go to people and go, well, this is how it is. As it turns out, he didn't want to be a broker. It was too much strain. He's a forest ranger today in California. A good one. But I was proud of it, and it stuck with me all the way through. So until this market gets back over the 1980-40, you've got a pattern of lower highs, lower lows, and the pros likely want to sell into rallies. Now, then you start measuring where's potential support in the market. Have you dropped too far? Are you oversold? Let's do it one step at a time. The resistance is very clear. It's 1965.20 all the way to 1973.40, the 100 and the 18-day average. On the way down, what I think one of the best tools I've seen in trading is called a Bollinger Band. It is an algorithm designed to give you a support and resistance zone where the market will trade within those bands 95% of the time. You ask, why 95? Why not 85? Why not 100%? The reason is you want the band to hit it, so you can come out of trades. Now, other people look at it and they'll say, I'm waiting for it to lock in on that, and that's where I want to go. I want to keep selling when it's against it. There are many techniques. I like the one that I have, which is this. When the market hits these bands, you often get your bounce and the pros are coming out of trades. When you marry it to the slow stochastic, you get a set of rules. I teach them in my enhanced Bollinger Band course, which is at the end of this video. All you need to do at the end of this is watch it, get yourself educated. What's the best tool you have out there? It's you. And if you watch this, takes you to the website, there'll be an area to click on it. Learn. Can I make it any easier? Learning is so important. If you're a regular viewer here and you don't understand this, shame on you. Spend a few dollars. We're not talking a family fortune. We're not talking these $1,000 courses. We're not talking $500 course. We are talking a few dollars and learn. Okay, so as I see the market, you're oversold, you're under the Bollinger Band. You only spend 5% of the time above or below a Bollinger Band. It's not the spot that I would tell you to go short, but I am the bear. So in looking, I patiently wait. If the market doesn't give me a rally, guess what? I don't need to trade or tell my clients to trade. It's that simple. When I go to the August gold versus July silver, we have markets that were trading for a while and a good while under that 18-day average. Once it got over, I said, you will see, and I did this back over here. The tapes, by the way, the videos are there if you're watching it on YouTube. I believe it was right here. I said on this day, go back to the 20th. Okay, today's only a couple of days ago. I said, watch out. The pros are bailing on this. Unless it gets right under it, it's probably going to move even further on it. You tell me it hasn't done that. And what that means is gold probably goes flat and silver drops against it. And that's exactly what occurred. Now, silver is underneath the 200-day and the Bollinger Band and oversold. As I said yesterday, I expect that the pros have covered their shorts. Could it fall further? Yeah, doesn't matter. I don't think you'll attract new selling on that setup just yet. Now, if we take a look too, did we get a breakout of the sideways action to the downside? Well, one of the things I do when I go back on the chart, I see where did the market settle on any day under it? On this day, you settled 2281. The Bollinger Band was 2280 and a half. You didn't settle under it. So the answer is you don't have a breakout yet. There's a certain way to get a breakout. This isn't it. In the copper market, why do you think you're stopping this rally? This was today. Why do you think you're stopping? You don't think that's the first challenge since April of the 100-day average and the combination of fresh test of the Bollinger Band? That's why it happened. Now, are we embedded? We certainly were. So let me walk you back on the chart a little bit. Let's not count tonight's trade. Let's go to Thursday trade, embedded. 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 Embedded means both numbers are running sideways over 80. I can go on and on. But now you're starting to flirt. Watch with losing the reading. You're at 79.73. There's an area to buy this market, but when you lose the embedded reading, I teach my clients, nope, there's better places to come in. We're also getting very close to a major crossover where the 18-day average is getting ready to cross over the 200. So on breaks, I think the market is a buy. The question is, does it first become overbought? When you lose the embedded reading, that's it. Have we lost the reading? No. Intraday, you're losing it. It hasn't been lost. You got to close under 79 on my rule for that to be the case, and then I look for a further decline. So the bulls are fighting to control the market, what control they have left of it right now. In the platinum, my story has unfolded. I kept saying that I think that you're going to see that the waning of the demand for platinum and palladium will go away because you have a situation where catalytic converters are going to be going like what? Horsewhips from your grandparents' day or your great-grandparents' day. And that's what's happening is you're not going to have that demand. Now, that's not going away tomorrow. It's not going away the year after or the year after or the year after. Yeah, It'll get harder and harder to buy cars after 2025 that you don't really think about buying electric over a combustion engine. As for used cars, they're out there, and every time you replace your catalytic converter, you're going to need it. But the millions of cars produced between China, the United States, and other parts of the world that are now, we're seeing more and more electric and less combustion engine. There's less demand and it adds up. Hope you saw today that the government, our government, gave a $9.2 billion conditional loan to Ford. If you get my full research, I write about it tonight as to what that's all about. But it's all about batteries. It's all about not having the U.S. dependent on Chinese technology for our batteries and other things. And that's what this is all about. So you're at the midst of a big shift to these electric cars. As you can see, though, oversold. Are we embedded? Oh, yeah. Get a good rally in this market under the right terms. I'd be looking to sell. What else happened? Do you not see where the 18-day got under the 200? And the market tonight going for a new low on the trade. In the dollar index, you have an embedded reading. It's when, obviously, you get 3 days in a row where the market is under 20. Day 1, 2 was Wednesday, day before. So now you have it. Is the market a short sale? Day before, you were also there. The answer is yes. There's a way to approach it. I'm going to look for the resistance up here at the 102.40 area. I don't know if you'll get in there, but that's what I'm looking for. And as long as the market keeps the embedded reading, I think the pros will try the short side of the market. So you put it together, you get a game plan, you use momentum, you use these Bollinger Bands, you use what is a trend, and the filters. Do you know how to put it all together? I've really created a simple technique. If you focus on the Bollinger Band, is how to use it. Please take a look at this. When you're watching it, remember, at any point you can just click up at the top. It'll take you right to our website, so you can take a look at it there, or you can go to iraepstein.com, and under education is where my courses are. I'm Ira. Let me introduce this character. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.